Hello, I am Karl-Christian Johannessen. I am an attorney with the Minnesota Association of Townships. Today, I want to discuss the replacement of lost revenue, which is one of the major categories of uses allowed under the American Rescue Plan Act. Before we get into the ins and outs of lost revenue replacement, I want to clarify what is going to be discussed today and what will not be discussed. What will be discussed is the replacement of lost revenue and how it can be used. What is the replacement of lost revenue, and particulars about lost revenue replacement calculations. What will not be discussed in this presentation is how to apply for the American Rescue Plan Act, how much the town is to receive from the American Rescue Plan Act, and how to use funds allowed in other categories. So, how can we use lost revenue funds? This is going to be the broadest category of the American Rescue Plan uses. It can be used for most government services, including roads and bridges, fire or emergency medical service contracts, officer or other employee wages, and other government services. However, there are a few big things that this cannot be used on. This cannot be used to replenish the rainy day fund. In other words, any savings must be spent by December 31st of 2024. It can't be used to pay off any debt, which includes bonds, certificates of indebtedness, or lease purchase agreements. This also cannot be used to directly or indirectly offset tax reductions or tax increases that are due to a change in law, regulation, or administrative interpretation. And this cannot be used to deposit into pensions if this payment reduces the town's liability incurred prior to the COVID-19 pandemic and the payment occurs outside of the recipient's regular timing for making such payments. To be able to use these funds, we must know what's lost. First, we have to define revenue. Revenue can be defined simply as any money coming into the township. However, there are limitations to this definition. This will not include federal to local government transfers like FEMA or the CARES Act. It will not include proceeds from the issuance of debt or sale of investments, and it will not include revenue generated from utilities and insurance trusts. However, this does include property taxes, transfers from the state to the township, like gas tax, and fees from permits, applications, or rentals. Lost revenue is the difference between the town's counterfactual revenue and the town's actual revenue for a certain year. Counterfactual revenue is going to be an estimate of what the town's revenue would have been if not for the COVID-19 pandemic. Now that we know what lost revenue is, how do we determine that? Well, the U.S. Department of Treasury has provided an easy formula to use, which you can see here. Now, this formula isn't as complicated as it first looks, and it's best to understand it in these following 5 steps. First step, you'll take your 2019 actual revenue and multiply that by 4.1%, unless you're in a situation that we'll discuss later. This is your 2020 counterfactual revenue figure. Next, you'll take that 2020 counterfactual revenue figure and subtract that by the actual revenue received in 2020. This total is the amount you received from the American Rescue Plan Act that can be utilized towards revenue loss in 2021. Step 3, you'll take that 2020 counterfactual revenue and multiply this by 4.1% to determine your 2021 counterfactual revenue. Step 4, you'll take your 2021 counterfactual revenue figure and your 2021 actual revenue figure when you're able to receive that, which will be after December 31st of 2021, and take the difference between those two to calculate revenue loss. In this last step, you'll follow steps 3 through 4, while replacing the 2021 figures with that of 2022 and 2023 to calculate the revenue loss in those years when possible. Now remember, the town doesn't have to do this calculation itself. There are calculators online, one of which we'll discuss here in a moment. To find one of these calculators, you can visit our website, mntownships.org. From there, you'll want to go to the top and hit the ARPA Info tab. From there, you'll be provided another set of tabs, and there you'll go to the ARPA Uses tab. From in there, you will be brought to a page that looks very similar to this. Here, there's a spreadsheet that has a link to finding this calculator. Remember, this can be subject to change as more information is received, so if there are any questions, please reach out to info@mntownships.org. After downloading that link, you'll be brought to this page, which is the calculator. There are several blanks here, but don't feel intimidated. This is easier than it looks. Really, only one box needs any sort of changes, and we'll go into detail what each box means later. In short, what you'll do is you'll input your 2019 revenue number, and you'll receive the counterfactual revenue figures for 2020 through 2023. The difference between the counterfactual revenue and your actual revenue for these years is the amount from the American Rescue Plan Act that can be used towards replacement of lost revenue. Now, in this first box, this is your base year revenue. This is your 2019 revenue figure. Remember, revenue can be defined most simply as any money coming into the township. But again, this will not include federal funds, proceeds from the issuance of debt or the sale of investments, or revenue generated from utilities and insurance trusts. So the town will want to take all of its revenue, excluding the above discussed things, which will include your property taxes, gas tax, and fees from permits, applications, or rentals from 2019, and place that into this square. Next, you'll get to this growth adjustment square. As of now, don't touch this, but we'll discuss later what this means. Also, don't change this. Your fiscal year end date is always going to end December 31st. So December 31st of 2019 is the correct figure here. In this next box, none of the information can be changed, but it will provide the town with its counterfactual revenue, which is the amount that the U.S. Department of Treasury expects the town to receive for that year, based upon its 2019 figures. Remember, it's the difference between the counterfactual revenue and the actual revenue that is the town's revenue loss. After that, you will place your actual revenue numbers as indicated for the time periods if you have them. Remember, this number will not be available until after December 31st of the appropriate year. After that, this box will provide the necessary arithmetic to determine how much the town can use from the revenue loss category in a given year. Now that we've learned more about each of these individual boxes, let's look at an example. For this example, let's look at a town with a revenue of $100,000. Remember, the growth adjustment factor and the end of the fiscal year date shouldn't be changed unless there are other factors that we'll discuss later. If the town uses $100,000 as its revenue figure, the U.S. Department of Treasury expects the town's revenue for the following years to be $104,000 in 2020, about $108,000 in 2021, about $113,000 in 2022, and about $118,000 in 2023. If you don't put in any number in the actual revenue section, the calculator can't do the proper arithmetic to see what the town's specific revenue loss for those years. Now, most towns' actual revenue will be fairly similar year to year. So here I'm just going to, for simplicity, keep this at the $100,000 mark from year to year, meaning that we can look at this and see that the town's revenue loss in 2020 will be $4,100, about $8,300 in 2021, about $13,000 in 2022, and about $17,000 in 2023. Now that we've looked at the calculator, I want to make a couple of final notes. First, you get to make this calculation each year. The total amount that can be used in the replacement of lost revenue will accumulate through the years, but you can only use the money once you're actually able to make the calculation for that year. Second, you can't make the calculation for subsequent years without first bringing in the actual revenue number for that year, which will mean it has to be after December 31st for that year. Third, if you're finding that even after you've gone through the lost revenue calculator, you don't have any lost revenue or very minimal lost revenue, please look at this next section about the growth adjustment factor and learn more about how your township may be faster growing in its revenue than others, thus requiring a higher growth adjustment. If there are no issues for your town can finish off here. As mentioned before, I would be talking about the growth adjustment factor later. So, what is the growth adjustment factor? This is the amount that the town increases its revenue year to year on average. Or in other words, this is the average of the amount of revenue growth from year to year. The federal government wants to look at the 3 previous years' worth of growth adjustment factor before the pandemic, meaning that you'll look at the 2016 to 2017 years, the 2017 to 2018 years, and the 2018 to 2019 years. Why does the federal government use this 4.1% as a standard? Well, the federal government did an overview of local governments throughout the U.S. and took the average growth adjustment factor and determined it was about 4.1%. To decrease its administrative burden, the federal government presumes that all local governments meet this 4.1% standard at a minimum. However, if a town received very little or none in this revenue loss category, the town may want to see if its growth adjustment factor is actually higher than that 4.1%, and it can use that higher figure. With all this being said, how does a town determine its growth adjustment factor? Well, the town will want to take the percentage of revenue growth rate for 3 separate 2-year periods. For the American Rescue Plan Act, these periods are 2016 to 2017, 2017 to 2018, and 2018 to 2019. How we determine this can be seen in the below example. So if a town's 2016 revenue was $100,000, and that increased to $105,000 in 2017, the town will want to take the revenue growth for that period, which is at 5%. How we determine that is by using this growth rate formula. So the town will want to take the later year, in this case 2017, subtract that by the earlier year, 2016, and then divide that total by the 2016 figure. That will give us 0.05, meaning a 5% increase between those 2 years. Next, you'll want to take the next period's growth rate, so that's $105,000 in 2017, and for this example, $110,000 in 2018, which will give us a 4.76% growth rate. Again, take the 2018 period, subtract that by the 2017 period. That total is then divided by the 2017 period, which will give us 0.0476, meaning a 4.76 increase between those 2-year periods. Finally, you'll take this last period, the $110,000 from 2018, and that increase to $115,000 in 2019, giving us a growth rate of 4.54%. Again, 2019 at $115,000 subtracted by $110,000 in 2018, divide that total by 110,000, which is the 2018 figure again, to give us a 4.54 or 4.54% increase between those 2 years. After you take that growth percentages for those 3 years, the town will want to take the average of those 3 for the growth adjustment factor. So you add the 5% by the 4.76% and the 4.54%. That total then gets divided by 3 to give us 4.74%. This total is the town's growth adjustment factor in the previous example. Because the total above can then replace that lower standard rate of 4.1%, we want to look at the ARPA calculator and how you might look at that increased growth adjustment factor. So again, in 2019, the town's revenue was $115,000. Its growth adjustment factor was 4.74%, which is greater than the 4.1%, so it can replace it. This will then give us increased counterfactual revenues, $120,000 in 2020, $126,000 in 2021, $132,000 in 2022, and $138,000 in 2023. Again, we're going to maintain the same actual revenue as it doesn't change year to year very often. So if you don't have a substantial change from year to year, the town's revenue loss will be $5,400 in 2020, $11,000 in 2021, $17,000 in 2022, and $23,000 in 2023. In conclusion, remember, this revenue loss will accumulate to larger amounts year to year, so you can wait until later years to see how much of this can be dedicated to government services. The ability to allocate the American Rescue Plan Act funds ends December 31st of 2024. So the last time the town can make lost revenue replacement calculations will be December 31st of 2023, since the town will not get the actual revenue numbers for 2024 until after December 31st of 2024. Changing the growth adjustment factor is likely not to be necessary for many towns, but look into it if you're not able to use many funds towards the lost revenue replacement, or your town tends to increase its revenue substantially year to year. Further, if you have any questions on how to determine the town's growth adjustment factor, please work with a professional that can assist the town in this determination. If you have any further questions, please email us at info@mntownships.org or call at 1-800-228-0296.